In early 2025, inflation remains persistent. Despite slowing slightly in March, with year-over-year consumer prices rising 2.4%, down 2.8% in February, the Fed is still holding its benchmark rate between 4.25% and 4.5%. That's according to the Federal Reserve's official March summary. Now, that hasn't stopped the speculation. There's been political pressure for rate cuts, including those from President Trump, who, according to the New York Post, has urged Federal Chair Jerome Powell to start reducing rates. Meanwhile, financial media has been full of takes, some calling the Fed too cautious, others saying a cut now would be reckless. But what does all that actually mean for you? The Fed's decisions influence borrowing costs broadly, from credit cards to car loans to, yes, mortgages. But they don't directly set mortgage rates. Those are based on long-term bond yields, inflation expectations, and investor sentiment. Still, we can connect the dots. According to Freddie Mac, as of late May 2025, the average 30-year fixed mortgage rate is sitting at 6.76%. And per Wells Fargo's latest housing forecast reported by Investopedia, they don't expect rates to fall much, projecting an average of 6.9% for 2025 and a small drop to 6.5% by 2026. In other words, don't hold your breath waiting for 4% or even 5% rate to come back. Not anytime soon, at least. Now let's bring it local, because what's happening here in Phoenix is diverging from the national story in some pretty major ways. A new piece published by azfamily.com on May 30th points out that Arizona leads the nation in price reductions. Again, 28% of active listings in the Phoenix metro saw a price cut in April, while the national average sat around 18%. Let's sit with that for a second. That means nearly 1 in 3 sellers in the valley are adjusting their prices downward. Why? Because homes just aren't moving like they were in 2021 or 2022. We're not in a crash, but we are in a market that demands strategy. And that's exactly where opportunity opens up. For buyers, this is your window. Price cuts aren't about discounts, they're often a sign that sellers are open to other incentives too. Things like rate buydowns, closing cost coverage, or repair credits, these are things I negotiate for clients all the time. And when you're walking into a market where homes are already seeing 5 to 10% markdowns, there's real leverage. And for sellers, this doesn't mean panic, but it does mean precision. Overpricing your home in this climate, that's a fast track to sitting stale on the market. You lose momentum, you lose eyeballs, and you start inviting lowball offers. Instead, we start with a conversation. What's your motivation? Is this a move up, a relocation, a divorce, a downsize? Whatever the reason, the game plan changes based on the goal. And then we build a pricing strategy, a marketing approach, and, if needed, thoughtful concessions to keep your net strong while attracting serious buyers. If you're a buyer in Phoenix or really anywhere in the valley, 2025 is shaping up to be a market full of mixed signals. Prices aren't crashing, but they're adjusting. Inventory is slowly increasing, but still far from abundant. And rates, they're steady but not cheap. So what should you do? Well, the key here is understanding the new psychology of buying. A lot of buyers are still holding out, thinking, I'll wait for the rates to drop. But like we just covered, the Fed isn't likely going to slash rates drastically anytime soon. And even if they did, Wells Fargo, Forbes, and Investopedia are all saying we'll still be looking at rates in the high six range well into 2026. That means waiting could actually cost you more, especially if prices start inching back up while rates only dip slightly. And here in Phoenix, we're already seeing some buyers start to jump back in because they realize the market isn't going to wait for them. The smart move right now is to focus on affordability and negotiation. Because of these price cuts, again, 28% of listings have reduced prices according to AZ Family. You can walk in with stronger negotiating power. And I'm not just talking about sales price. I'm talking about things like sellers covering your closing costs, offering concessions to buy down your rate, covering appraisal gaps or repairs. And all of these are tools that we use all the time, and they can make a bigger financial difference than waiting and hoping for a 0.25% drop in mortgage rates next year. Plus, if you're a first-time buyer, you may qualify for down payment assistance programs or special loan structures that can sweeten the deal even further, especially in certain Phoenix area cities where affordability is still within reach, like Buckeye, Goodyear, or Surprise. Now, sellers, I know it might sound like the market is shifting out of your favor, and in some ways, yeah, it's not 2021 anymore. But that doesn't mean you can't still win. You just have to adjust your expectations in your playbook. So let's talk about the psychology of buyers right now. They're cautious, they're calculating, and they're comparing your home to dozens of other listings and weighing every cost. But if your listing stands out, not just in price, but in presentation, condition, and in perceived value, it's still going to move. That's why every seller I work with gets a tailored plan. We talk about your goals first because the plan looks different if you're selling to free up cash versus trying to move quickly for a job transfer. Then we're going to look at data. How's your specific neighborhood trending? What are buyers in your price bracket expecting right now? Do you need to offer incentives? Should we stage? Should we price just below a threshold to attract a bigger buyer pool? Every step from pricing to marketing to negotiation should reflect today's market, not last year's. And remember, some of the price reductions we're seeing right now are the result of bad strategy. Sellers who overpriced upfront, sat on the market too long, then had to slash. When we start right, you avoid the need to chase the market downward. So, what's the takeaway? Yes, the Fed is being urged to drop rates, but inflation is still sticky and the Fed is playing the long game. Meanwhile, mortgage rates remain in the high sixes and likely will for a while. Even Wells Fargo is projecting 6.9% for the remainder of the year and slightly less in 2026. But here in Phoenix, we're already seeing market movement. Sellers are adjusting prices, buyers are stepping back in, and if you're strategic, whether buying or selling, you can absolutely still win. If you're a buyer, focus on affordability, not timing the market. Let's talk about where to find price cuts, how to get seller paid concessions, and which homes give you the most upside long term. If you're a seller, don't wing it. Let's craft a plan based on your goals and what the market's actually doing, not what it did 2 years ago. I'm Caden Reese, and I help people navigate the Phoenix real estate market with strategy, confidence, and real time market data. Whether you're buying your first home or planning your next move, you can reach me directly at the information down below. Don't forget to like, subscribe, and drop a comment. What do you think the Fed should do next? Is now a smart time to buy or sell where you are? I'd love to hear from you, and I respond to every single comment. Thanks for watching, and I'll catch you in the next video.